Good day, everyone. My name is George Zarya. I'm CEO of Sequant Capital, and welcome to our webinar on cryptocurrencies. Before I start, I would like to say a couple of words about our company. We are a hybrid broker, advisory broker, regulated by FCA. Although the company has been around for 10 years, we are going through a rebirth with a new robo angle to our business. We will soon be launching our first robo product called Bitcoin Protect. It will enable clients to build and execute structured products using exchange-listed options in a matter of seconds, with a very simple visual interface with interactive infographics, very user-friendly. Go back to cryptocurrencies. This is a special sector focus for us. And this is a relatively new asset class, and we feel there are a lot of informational gaps and a lot of synergies with what we do on the securities market. I'm personally a big believer in crypto assets, and I'm very excited to see what is happening to the market, and we're looking to participate in the sector one way or another. Today we're looking to cover quite a broad spectrum of topics and to give you a well-rounded view on what we think about cryptocurrencies and how you can capitalize on this growing asset class. We have two sessions where I will cover the fundamentals and go over the key factors that investors should be wary of when investing into crypto assets from the longer run perspective. So the key part of the presentation will be dedicated to fundamental analysis, or the factors that we would recommend to look at, and the approach to evaluating the individual coins. And in the second part, my colleague Stephen Beckett will be covering a more of a short-term view with a technical analysis application, and this will give you a perspective on where the market is going in the short run and how you could actually trade. He will do a live tutorial of the platforms we're introducing. And so by the end of the webinar, you should have a good understanding of the sector and hopefully understand the benefits of working with Sequant Capital. And we can cover all of your questions at the very end. So let's start with the very basics and define terminology. The original term for the technology was a proof of work, not blockchain. The later they renamed it to blockchain, which means is that these transactions work is being recorded in a public decentralized ledger, and the key features of the blockchain is that it is distributed, meaning decentralized, similar to how peer-to-peer technology works. B, it's cryptographic, which means there's an encryption of messages with the public and private keys and passwords. And finally, the immutability of the database. This is a very rare feature in the technology, and in the technology world, and it's what makes the whole technology unique and valuable. You cannot delete it, replace, or manipulate it. So relying onto this characteristic, the distributed computers agree on which group of transactions will be appended to, for example, Bitcoin's blockchain next. And to put it another way, the proof of work specifically deals with how transactions are grouped in blocks and how those blocks are chained together to make a Bitcoin blockchain, essentially. And once it's chained, you cannot remove the block. So this is the whole concept of immutability. We would not classify the majority of the cryptocurrencies crypto assets as currencies, but rather most are either digital commodities or crypto commodities. What they do is providing raw digital resources. And the third subclass is digital token, crypto tokens, which then provide a finished digital good and service. So a currency fulfills three well-defined purposes: serve as means of exchange, store value, and serve as a unit of account. So to simplify this, you can imagine we can take an Apple Pay with an App Store. So the Apple Pay essentially serves as Apple Pay money serves as a cryptocurrencies. App Store is a crypto commodity platform, allowing to build services and create value. And all the apps within the App Store are crypto tokens delivering the end good. So in our increasingly digital world, it only makes sense that we have digital commodities such as computing power, storage capacity, network bandwidth, and so on. So that's where this all going to. Beyond cryptocurrencies and crypto commodities, and also provisioned by blockchain networks, the finished products or digital goods and services like gaming, media, social networks, and more, increasingly more. And they all orchestrated by crypto tokens. So moving over to regulation, we have a map of the overview of what the regulation currently look like and how different countries what different countries view on the regulating crypto assets. We've seen governments debating on the topic of cryptocurrencies, and many of them feel that allowing cryptocurrencies for legal transactions would basically mean and result in loss of economic power and a shift towards the decentralized economy on the global scale. Well, even though many countries across the world permit cryptocurrencies, they have been under quite a lot of scrutiny and seen with skeptical eyes and many others. U.S. in particular, wary of ICO hype that seems to be coming to an end, to be honest. And there are a few court precedents which lay out the ground rules for the crypto space to be regulated. UK has not published any regulation, but our conversations with the FCA point that they certainly dislike what's happening in the market and are studying it. But my guess, the actual regulation won't come earlier than 1 year from now. So there are certain countries have gone to the extent of banning the currency altogether, making its use, possession, or trade illegal, like China and Russia. Although Russia is investing heavily into the infrastructure at the government level and most likely will start regulating the sector pretty soon, and China has a currency, a cryptocurrency that is backed by large corporations that is also showing some support within the country, and my guess would be that down the line China would introduce some regulation as well. So the going back to EU, Europe's approach towards the blockchain technology is quite positive and welcoming. So it appears that they following the path of the innovation first business philosophy, which could end up quite supportive in development of virtual currencies from several angles. So encouraging the use cases to test impact and laws, exploration of the use cases, and giving entrepreneurs confidence that their approved applications will be trusted by their target markets. Very important. And so this approach could not only encourage the ecosystem, but could also end up making Europe a prime destination for blockchain development. So as business choose the continent for their home base, and the talent also follows. Going over to the current state of the market, we have a picture of the Gartner hype cycle that lists new technologies and rates it in terms of the stage. So the Gartner hype cycle has a good comparison of where different technologies stand, and the very positive thing that it shows that the blockchain technology is past the peak of inflated expectation stage and moving towards the trough of disillusionment. What does that mean, actually? Why I'm saying this is positive? Blockchain technology, including cryptocurrencies, they are slightly, the two are slightly different. So the blockchain is quite a it's quite a broad concept, and I think the cryptocurrencies in particular are a little bit ahead of the curve. And this is basically the decreasing hype over the ICOs. I think that's what means by the trial of disillusionment. And there's been a lot of issues with the hacking and security part of it. So we are going through a quality cycle, and this is a very natural process, and the time when the believers take a more focused approach and increase the depth of the industry by perfecting smaller parts of the ecosystem. So, for example, the exchanges and the wallets that service the industry have gone through a few failures, and on the path to enlightenment. We've seen attempts to launch a decentralized exchange, and there's been a quite successful ICO recently, and the new launches continue to happen with many different innovative features. So the trends we should be looking at, and sort of conclusions we can make is the mass adoption of the technologies is happening, and it's almost widespread. And we're going to look at another graph that shows how widespread the adoption of blockchain is happening. So there's a lot of corporates who participate in the sector one way or another. Very large corporates as well. So we believe the regulation is inevitable, because the ecosystem of blockchain is integrating more and more with the fiat world, or fiat currencies world. And the launch, as an example, the launch of the futures by CME evidences that. There've been some speculation. Amazon is registering a number of crypto domains that could potentially mean adoption of cryptocurrencies in its own Amazon ecosystem. As a separate trend on its own, we see the introduction of derivatives, and the market efficiency and price discovery processes will become much more advanced and efficient, and this will lead to lower swings, and volatility would decrease. We don't see it yet, and this is something we can definitely capitalize on, and Stephen will share some thoughts about this shortly. The new hype will be, I think, will be related to commodities and tokens, because that's where the functionality, that's where the practicality of the whole industry comes from. So we see an explosive growth in the market. The immense pace of the ICO industry in the past year, this mass adoption of it's happening with a frightening pace. I guess it's frightening mostly for the regulators, but we have reached the point when the market started to digest institutional money, and this growth is likely to accelerate as regulation around the sector clarifies. Speaking to the community, one of my colleagues mentioned that when running ICO, the retail population is no longer has the level of participation as it used to be. It's the institutionals that do take more proactive stance in the placements and crowdfunding exercises. Many private investors get burned, and that's a natural thing. I mean, that with the unregulated, high growth sector, there's a lot of risks. It's worth to notice that Bitcoin lost its dominance, and its share is gradually decreasing over time. Again, this is I think it's a healthy trend. So the other thing is we should notice that the market cap is supported by the number of transactions. So it's not just purely investing activity. The coins are changing hands more frequently, and for non-speculative purposes. Okay, so we've seen, again, to repeat that, we are seeing more and more cases where large corporates and the governments adopt the technology. And this is an interesting graph from the Accenture that outlines next year as a big one in terms of banks and capital markets participants going to a mass adoption. The level of service providers grow tremendously. So this is essentially the beginning of slope of enlightenment in the Gartner's hype cycle, when the major productivity just kicks in. Now the main part of my presentation is looking at how do we actually value crypto assets. And one of the most important differentiators of this asset class and its reliance on factors that could not be applied to conventional securities asset classes. We can certainly apply modern portfolio theory, and if we do, we can characterize cryptocurrencies as highly volatile, uncorrelated to the market, to the conventional equity market, or fiat currencies benchmarks. It's a high-risk investments, which could translate into a high return, high potential return investment as well. If we were to advise on the composition of the, let's say, a pension fund for millennials, that's what I think is a good angle to look at it. In my opinion, the cryptocurrencies should certainly be included in the portfolios. And the asset allocation principles presume you should allocate a portion to alternative investments, and the cryptocurrencies fit very well into the alternative sector. So now let's talk about what sort of analysis you could perform looking at each individual Bitcoin and altcoins. So the rationale or the code behind the blockchain, it is very important. The Bitcoin as the mother blockchain, or has a simplistic rationale. Its purpose to be digital currency, and in fact it's become a digital gold or gold standard, meaning it's a sort of a benchmark. That's why there's a lot of traction. The Ethereum, for example, on the other hand, they was created with the purpose of developing a decentralized world computer with processing power being its main commodity, and accommodate various apps on top of it. So similar to the analyzing the management of companies when you do research, stock research, we need to make a due diligence on the team and the developers. So it should be easy to tell the difference between a scam and the real deal. So the key differentiator there is it's good intent and the way it's being communicated, and the rationale of the developer team behind the issuance model. So again, Ethereum, its founder Vitalik Buterin was a journalist covering tech sector, and when the idea was born, it didn't make much time. He didn't take much time to spread and popularize the concepts of its platform, and gain traction very fast. The recent example in cryptocurrency, for example, I came across called LISC, which I had learned about very recently, and the concept is very similar to Ethereum, and its founders are very proactively promoting the platform, meeting with miners and supporters, and what they did is they partnered with Microsoft to integrate into their cloud computing network. So this helped quite a bit. They went up to top 6 by capitalization since only March 2016. So the marketing effort of the team is quite important. The pre-mine percentage, what it means is this is the free float at the issuance is or number of total coins, the percentage of total coins being released at pre-ICO or shortly after. The large number of such issuances, it basically disadvantages the broader community. Hence, the practice is not widespread. Moving forward, so mining difficulty, quite important as well. Essentially it's a factor of competition amongst the miners, and you can find actually a chart for each of the currencies that calculates precisely how difficult it is to mine and the reward that you would get. Issuance schedule, again, it's one of the sort of the DNA of the coin, and it's in the code of the blockchain as well, and part of the rationale. You can estimate the basically the inflation rate or deflation rate, and it gives it a static value in terms of inflation. For example, Monero, it will have a small degree of inflation for its entire life, beginning in May 2022, when 0.3 Moneros will be released every minute. At that time, there will be around 18 million units of Monero outstanding. So the inflation in that first year will be only around 0.9%. Interestingly, in 2040, for example, there will be a nearly equivalent number of units of Bitcoin and Monero outstanding. And from the period from 2019 to 2027, Monero rate of supply inflation will be lower than Bitcoin's, but in other periods the opposite is true actually. So processing capacity, quite an important factor as well, and there's a lot of debate going on about that in the industry. So the number of transactions, or at its most basic level, they just made out of data, and is usually composed of the information regarding the transaction itself. So this data takes up space on the block it is included in. So currently each block on the Bitcoin blockchain is able to contain 1 megabit of data, meaning that the block size of the Bitcoin is one megabyte. This means that there's a limit to how many transactions can fit into Bitcoin's block. According to the data contained and in different transactions may differ, and many claim that the increase of the block size can result in the centralization of the mining process. So that gives an unfair advantage in some cases to parties who can have the advanced hardware and the requisites to the mining would become much higher. And so there are pros and cons to the overall increase of the block size. So the positive things is the current block size limits Bitcoin use to 4-7 transactions per second. This can force regular users to compete for transactions by increasing the fees and pricing some users out of the network once Bitcoin is popular enough. So a greater block size would allow miners to receive more transaction fees without the need for users to pay higher fees. So many claim that the block size increase would also put too much weight upon the miners, given that the increase in storage requirements and the blockchain size would not increase exponentially overnight anyways. This would simply allow the network to grow as the demand grow with it. So on the negative side, the bandwidth requirements of the full nodes, which will also increase the full node count to be reduced. So the fact that some solutions do not require bigger blocks on the hard fork to take place in order to increase scalability. So many claim that bigger block size will just not be necessary. And without going into too much details, so it's a very technical arguments that not easily comprehensible, but the time will show which proponents of which philosophy win. So liquidity, obviously, that's a very natural and very important factor in trading and investing, as well as it defines the liquidation risk and liquidating the position in a short period of time. It lowers it's important in terms of the costs as well, and the better the liquidity, the tighter the spreads, so that decreases the costs. The infrastructure that supports liquidity as well. So the Bitcoin as a gold standard is widely covered in many cases. Buying an altcoin is possible only via Bitcoin, because the infrastructure was just not good enough for each individual altcoin. So this applies to the exchanges, the wallets, even the banks. I mean, the banks would open an account to invest in Bitcoin, but would not allow you to buy Monero, for example. Fungibility, which refers to the fact that any unit of currency is valuable as another unit of equal denomination. So we take a Bitcoin, for example, right? The problem there is that for balances known to have been used for illegal activity, and if an exchange or other service blacklist that balance in particular, and it means that it becomes illiquid and less valuable. So that's not a problem for Monero, for example. This is perfectly fungible altcoin, and its characteristic is attainable to the coins with anonymity in mind. So the privacy, this is again, it's a questionable parameter, but due to the controversy around the anonymity and the ease of money laundering activities and so on. But this is certainly a factor that needs to be considered. There are currencies like Monero, there's ZCASH, there's Dogecoin, Dash. They're very much focused on the anonymity factor. And we can see that Monero and Dash are in the top 10 list of most liquid coins. And now we're gonna go to the technical analysis part, which Stephen Beckett would present.
Hello everyone, and thank you for that, George. My name is Stephen Beckett. I'm one of the senior brokers here at Sequant Capital, and I'm going to be running you through some of the technical sides associated with the cryptocurrencies George has kindly talked us through there. Going from some of the more established that we've seen in regards to Bitcoin and Ethereum that have been around for a few years now, to some of the newer ones which are making their way into the market, such as Bitcoin Cash, Ripple, and a few others that we'll go through shortly. So to kick us off, we'll start with the one that's really taken everyone by storm, to be honest. George has obviously elaborated on the fundamental side of things with relation to Bitcoin, so I'm going to keep it very simplistic from the charting perspective. I'm going to run through obviously the trend, recent trading indicators, opportunities and market factors that are having an influence at present also. So it's fairly simple, looking at the graph in front of yourselves, that we can see that we're in an extremely strong uptrend from Bitcoin's perspective. It's been quite something to see the moves from Bitcoin, and over the last few days we've seen higher highs breached and new targets being made across the board, to be honest. There's been quite a lot of obviously speculation that obviously off the back of the drop that there was a start of the movement coming lower, and we might see Bitcoin slide back down to the lows. But you'll see here from the trend line we've installed, which has been long established here from middle of September, this price movement has really kicked on and formed from this base bottom here, which was around about a 50% pullback from the highs that we've seen, has been aggressively bought into and shown no signs of stopping, to be honest. The coin is now at all-time highs, Bitcoin, and is, to be honest, targeting what would be a new price around 10,000. This remains the cryptocurrency of choice. Any dips in relation to trading it should be bought into, as we have seen on that previous trendline support. 200-day moving average comes in at around 7,483 market prices at present. Pullbacks that we've seen, more so this particular one in November, has actually relieved the RSI overbought pressure that was developing across all time frames. It's still overbought on some of the longer term, if you're looking at the weekly and the monthly, but you just have to kind of flick back to those of you that are more familiar with index trading, for example, and indice trading, Dow and S&P on the US side. These have been overbought now on the longer term time frames for quite some time, so we know they can take a good while to reverse, and it's no key indicator that this bull run we're seeing on Bitcoin is about to slow at any time soon. So from our perspective, it's still very much the case that the trend is your friend, and we should be looking to obviously take advantage of any pullbacks we've seen. Those that would coincide with the trend line support that we've seen so far would be much obliged to look at purchasing into, which runs down obviously at present on market price to just below 6,500, which you can see on the charts there. So fairly simple from Bitcoin's perspective. Trend is strong, looking at long-term opportunities on the upside. Ethereum. Now this, again, very similarly to obviously Bitcoin. The trend is actually remaining positive, but we're starting to see a bit of a triangular formation becoming apparent, to be honest. The long-term trend remains positive. As mentioned, you'll see the trend line coming in on the lower side there. that is proving of extremely strong support should we ever reach down there. The first taking place in the middle of July, which you see in the rejection bar there, has been heavily bought into, and again you're getting a very similar rejection bar once we've come down to that level again. So price action has been very strong on the technical side and favors the technical traders out there for you. So it's quite nice to look at from my perspective. Although the pair is currently range bound, we've seen that the highs here topping around 400, dropping back down obviously towards the trend line support. So there seems to be a bit of pressure building on the upside around this 400 mark. Again, we're making our way up here. We've created a lower high in September from what we saw in June. Whether this rejection here will prove to be the top again, and we may see a dip back down to the trend line support, will create the opportunity that we're looking for, and that would be a move lower back to this trend line support. We've seen it already move twice off it. If we were to come back down there again, I think the movement and the bias will be towards the upside. So a break of the triangle is what we're looking for from a medium term perspective. That would be in the formation of either coming through the trend line should we reach back down here again, or would be looking at breaking through the top side, which would be clearing this lower high creation which is taking place, so 375, looking then ideally to break through the all-time highs too, as to not prove that we've just seen a blip above the lower trend line that is forming, and we may then look for a target price up to the 425s again. So just to kind of finalise on the trading perspective opportunities on this, we would be looking very similarly with Bitcoin to look at buy on dips. These dips would be taking place to the very strong trend line support which was coming in, which would be 275. Again, we'd be targeting the highs of 400 area, and we'd be looking obviously to lock in some profit at these higher levels, which has proved the stumbling block so far. So again, if we are looking for the breakout, which we've just discussed, and you are looking for a move above the triangle, let's say we were to see that first, and obviously a move through the all-time highs, we probably would see a large and apparent increase in volumes should we break that 420 mark, which will lead us then to looking at fib extension levels from the all-time highs. Those come in at $615 and $800 respectively. So you can see there's quite a bit of upside to be had should the top side be breached. Again, we would obviously need to see a clearance of 425 for that to take place. That would be your more medium to longer term targets away from this triangle that we've seen and been developing for quite some time now. We've seen actually Ethereum over the last couple of days really pick up. So again, after a bit of a stagnated period through October, we may be getting a bit of a move towards the top side again, and as said, if we can breach it, then you've obviously got your 425 level in mind and upside targets of 615 and 800. Should we come off these 400 levels again, we may get a move back down to that trend line support, which comes in around the 275 level. If you are looking to take a short opportunity on Ethereum at these higher levels, which come in at 400, obviously, again, it pays to be extremely diligent with these cryptocurrencies, which are prone to a volatile move, as we've seen in the past, and we're keeping stops extremely tight and keeping obviously a very close eye on those. ZCASH, obviously like most of the other mainstream cryptocurrencies, we have a trading range and a long-term uptrend, which we've just discussed on obviously Bitcoin and Ethereum. Over the more medium term, the pair has been trading within a range which we've started to see develop in Ethereum as well. So again, you've got to start keeping your eye out for these levels, trading within them, and obviously keeping an eye on the breakout points as well. One key point to highlight with ZCASH is we've seen a extremely exponential break here of the resistance which was forming at 311. Now this move here is exactly what I was talking about in relation to obviously trading Ethereum previously, when I said when we're looking at shorting cryptocurrencies, we've got to be extremely careful and obviously keeping an eye on it with our stop losses in a nice tight place, because any move like this is going to absolutely destroy any short positions which are in the market, which we did see at the time. Now, what we've seen is this market's come straight back down again, and it's come back down to resume obviously this trend line which is taking place near or there or thereabouts. Now, medium term, the pair has been trading between the range of 142, which is obviously drops down to here. You'll see 3 times it's reached down towards this 142 level, to 312, which we just mentioned is becoming a bit of resistance level from what we're seeing so far. Current uptrend line, which we're obviously keeping very close eye on because it's been a strong level previously, is 220, and that would be our preferred entry point for any long trades we'd be looking to pick up here. Again, you'll start to see the narrowing of this uptrend towards the resistance points, which comes in at 312, and that would be where you will be targeting your breakout. So again, to be honest, from ZCASH's perspective, as we've seen with the previous other 2 cryptocurrencies, the overall trend seems to be bullish. We're actively looking for entries on the longer side, and obviously anything towards the break point of 312, should we see it, we should be targeting previous highs of 420 and then potentially 500 on the upside from there. Moving averages and technicals from ZCASH's perspective, just a quick point on those, are actually suggesting a sell within the uptrend on a shorter term basis. So again, we're talking here obviously about a shorting opportunity at 312. Should we look to come off this level, as I said, we want to be keeping our stops nice and tight, obviously up and around 330 to protect against any moves like we've seen previously, obviously back in September. And obviously from a perspective of where we're looking to target this uptrend line here, which comes in around 220, and that will be our long side entry. So what we're trying to obviously create here as well is a scenario that people are really sticking to their levels on cryptocurrencies, because it's very easy to pass opportunities, jump in on opportunities, and in doing such, you are obviously giving up opportunities and letting them pass by. But at the same time, these cryptocurrencies that we've seen so far and how they've developed on the market and how they've moved have created very much a strong technical base which can be used to obviously help you trade these, and that's what we're trying to get across here, obviously with some of the trading patterns we're seeing. Litecoin, again, you'll see from the chart, mainstream cryptocurrencies are producing a very strong uptrend. It's from Litecoin's perspective, it's been very neat, as you'll see. Any dips towards the trend line have continued to attract buying interest, which we've seen throughout this period from June to obviously November, where we're situated now. Resistance has recently broken above 67. What we've just looked at from the charting perspective with obviously ZCASH, we saw a bit of resistance developing at 312. Now, Litecoin has initially tried that at 66, but obviously on the third attempt actually broken through. You'll see as well it's reached up towards a level of 74 before dipping back down to that 67 mark, which is now looks like it's started to become support. So previous resistance has now become support. On that basis, we should really be targeting an upside move towards those all-time highs again, which are currently located just shy of the 100 mark. If we were to obviously see those, we'd wait to see if any sort of or double top would start to be developing on that side of things. But based on the movement we've seen, the slight break higher above the resistance mark should now obviously become support at that 67 level, and then look to target those areas into the 90 again. So it's one that, to be honest, has been extremely neat, and anyone looking to obviously trade on that perspective, technically this is a very nice chart to look at. Bitcoin Cash. Now, Bitcoin Cash, as George would have run through you in the obviously presentation and slides earlier, has its differences to Bitcoin, and not just from a fundamental perspective, but also from a technical perspective. It's struggled where Bitcoin's obviously surged on. You'll see from the charts here, there aren't any lines drawn because there isn't too much of a trend taking place. We've seen initially quite a aggressive move higher here, up on the upper breaches, but that's soon been relinquished and actually come back down to the lows again. Being one of the newer cryptocurrencies, it's quite difficult to obviously chart and map a technical perspective on this one, but it doesn't seem to be keeping pace with some of its more established companions. Since inception, the coin has been trending low, with no real signs of obviously any real breaks higher other than the one spike we've seen. So we're looking for a base pattern to form, and then we'll be looking for obviously a bit of a move up towards those previous highs we've seen. But again, for anyone looking for value, there is some attraction here. However, we would believe that looking at Bitcoin Cash as opposed to the other cryptocurrencies could become an unnecessary risk and a little bit speculative for what we're looking at from a charting perspective. Dash exploded higher in recent days, and obviously made fresh highs in the process. You'll see that from the chart. The profit takers have moved in, and we've seen that sent lower from the levels which peaked at around the 600 mark. So any move on these crypto sides which has taken place from 240 up to 600, there are likely to be areas of profit taking on the way. We can refer back to previous charts where we've seen spikes higher and aggressive moves. The overall trend again on Dash, very similarly to all of the others, obviously other than Bitcoin Cash, is an uptrend. It's bullish. The pair has its volatile tendencies, as you'll see from the chart, but overall we'll be looking to obviously see this gradually eke higher and move towards those 600 levels again. We'd be looking to target any lower moves on this particular drop from the highs. Those will come in at 360 initially, not too far obviously where we're situated at the moment, and we have seen that bar chart there, you'll see, the candlestick chart there, you'll see has seen the move down to 360, which has been bought into, and now we're back around the 400 mark. We're looking any moves down there again, we'd be looking to pick up based on the price action we've seen there. And also, if we were to see these levels come back in around that 240 mark, again, we'd be looking at definitely coming back in around there, because that's starting to coincide with not only the support level, which we've seen developed since the early parts of September, and obviously reached there again in the latter part, but also it coincides with that uptrend line, which is starting to creep up upon ourselves. So if we were to reach down at those 240 levels, again, we'd be looking to pick some up, and the target prices, as said, would be those previous highs, which reach up to 600. Ripple, again, one of those which has, from the chart you'll see, has shown a very strong uptrend, initially getting off to a rip-roaring start, excuse the pun, that has seen us move in May, obviously up from the 0.05 region all the way up to 0.4. So some move from that perspective. Since then, we've seen a period of consolidation. It's starting to find a little bit more of a technical form, to be honest, because again, being one of the newer cryptocurrencies, it's quite difficult to obviously technically chart some of these from the early stages, and that's what we've seen with Ripple with that initial move. We've then come back down, consolidated, and we're starting to see a bit of a base and support forming around that 0.2 level, which you'll see on the chart. That coincides obviously with the uptrend that we've picked here. We've tried to target obviously this point in early September, which you've seen a dip down towards, and then as we've reached on into October and obviously November, you've started to see what I'm talking about, is that technical uptrend is starting to develop. You get your feel and an area for a point of support, and that's where the trend line has been drawn and come in. We'd like to see a pullback and test these levels, to be honest, and look to buy on those before actually looking at any long points. Do remember, as said, this has been consolidating for time. It's not making any new highs just as of yet. So again, we'd be looking to target a nice entry point around the 0.2 region, and then we'd be looking for a move and a retest, as you've seen previously, middle of August and obviously early part of October, a retest of that 0.2985 level, just shy of 0.3. Overall, the trend, to be honest, looks in relatively good shape considering the obviously pullback we've had. So again, if we were to break through this 0.3 region, we can then look to target those 0.4 higher levels that we've seen previously, and look to break those all-time highs for a fairly new cryptocurrency. So just to obviously run through the platforms that we offer on the crypto side, we've been quite selective with regards to what we've looked at. We like to offer two sides of the coin, one of which was Exante, who are one of the first to offer cryptocurrencies in a fund format. You'll see a lot of speculation online, obviously, about the security and safety that comes alongside cryptocurrencies in relation to e-wallets and security and theft on the internet. With Exante, they highlighted that as obviously one of the main stumbling blocks to enter cryptocurrencies for a lot of retail clients, just that security and safety. They produced was a fund-based system which tracks the actual rates of the cryptocurrencies, allowing you to do and obviously trade in the safety of the fund format. Now, as mentioned before, they are a multi-product platform with over 50 financial markets to be traded. Down here on the left-hand side, you'll see the financial instruments. You've got your futures, including your FX majors, your options, which include obviously the major indices, bonds, stock, ETFs, funds, and obviously the specifically what we're talking about today, which is cryptocurrencies. Now, speed of platform is one of the main benefits of Exante. We've had no issues with the desktop version, which we've experienced with some of the others we trialed and previewed. As you'll see here, you're able to flick between the cryptocurrency funds at the double click of a button. That brings up the chart. You'll then be able to see to switch between the time frames, the hourly and obviously the shorter term time frames. Especially what we discussed with the technicals earlier, it pays to look at more of the longer term time frames on cryptocurrencies, just because of the volatility that comes alongside it. So in relation to obviously themselves, there are no actual trading platform fees, no account fees, no inactivity fees, no minimum trade sizes to worry about. The fees charged are obviously only those which come alongside execution of a trade. This takes place here obviously on the quantity side, where you can pop in the number 10. For lot size, that would be a valuation of Bitcoin of 83,213. Fee there highlighted straight away tells you obviously what you'll be charged. A switch between the two, and you're able to see how that adjusts and changes. If we're looking to pop an order on, we just switch here between the actual draft of order. If it were to be a limit order, should we be looking to obviously purchase into the market a little bit lower than where we're currently situated, we can obviously change the size. We can pop in the price. Let's say we were looking to enter at 7,250. And we'd be able to obviously put our take profit and stop loss in should we need to. If we were to obviously look to enter that, we'd pop that in and put on the buy order. You'd see here current orders that would be there as working. Now, open positions, you'll see on this demo account we've got open here, we've got a 82 lots position open on Bitcoin. Current profit and loss is highlighted here, your average price and obviously current market price there, and you'll see down here on the left hand side your account valuation, how much you have available for trading, how much you've used for margin, and how much that equates to in a percentage as well, which is outlined just there. We're looking to obviously flip between some of the others. Again, we could look at obviously popping some LITECOIN in at market. Tells you your fees, obviously the valuation, and actually if you hover over either the buy or sell side here, you'll see what that equates to from a margin perspective as well. So again, we just pop that on, and as said, trade confirmed straight in on the Bitcoin side. So another 10 has been added at 92. We can easily, as said, look at actually bringing up your history as well. Account summary is available for doing that. It tells you obviously your cash balance there, what you've got totally invested in the funds at present, and obviously what that equates to as a whole on your actual perspective on the fund itself. So Ease of access and platform use is fantastic from Exante's perspective. They actually offer as well tight interbank spreads, which are not readily available to retail clients. And again, just to reconfirm that there is an app on available for when you're on the move, should you require it. If any of you require, as said, once we've obviously set this up post presentation and look to obviously get you actively involved on the crypto side, if any of you do require a specific platform run through where I can go into a bit more detail from how to obviously provide some of the charting bits, then by all means, no problem at all. I'd be more than happy to guide through that also. So this is our alpha-based platform. Again, it looks very attractive on the eye. It's very easy to use. You've got obviously your balance, your equity up here, your margin perspective. You've got your access to your portal, which is where you deposit. It can move money between separate accounts should you have them, and obviously look to withdraw funds. Also, actually built into the platform provides much easier access than a lot out there, which require you to log in through a separate device. You'll see here, obviously, we can type in whatever we wish to bring up a separate chart. Should we be looking at the FTSE, we can bring up obviously the FTSE. Very similar to Exante, the speed in which it brings up the charts is fantastically strong also. Specifically, obviously, we'll be looking at Bitcoin. Alpha provide two trading options for Bitcoin. One is against the euro, which provides a bit of a different dynamic out there to what a lot are offering. And one is against the dollar, which is obviously the more traditional method of doing such. See here, obviously, we can bring up the different charts and time frames, very similarly to what we did with Exante before. You've got your capabilities to obviously draw your Fibonacci's, trend lines on also, which, as I said, we've gone through from Exante before also. For those of you that are more interested in the bar perspective or line perspective, you have the ability to do such. Specifically, obviously, from looking at technical side, I always use candlesticks myself. So again, ease of access on this side, it's basically one-click trading when obviously looking at putting an order on. Should we be looking to buy, which we've mentioned before on Bitcoin, we just select buy, which is based on the chart. This brings up here, we've got the option obviously to do such at market, which we just discussed with Exante. Sizing structure tells you obviously immediately your margin impact on that side of things. Look at 10, 60,000 there, 100, look at 6,000 on the margin side. We'd be able to add protection to that order. Should we want to put a stop loss in, we'd highlight that and have that in wherever we so wished. For example, on this particular one, let's look at popping that in at 7,500. Tells you exactly your projected loss also. And for example, we'd be able to pop in as well our take profit, which as mentioned before, with our target price of 10,000. Tells you projected profit order. We can pop that order in and you should be able to see, you'll obviously get the confirmation, you'll see it pop up in orders and that gets executed almost immediately. Speed of transaction also with Alpha, given their sizing capability, is instant. Shows you here your position, profit and loss. Obviously, if you should wish to obviously make any adjustments to that, you can just double click on that and obviously adjust your stop loss, take profit, or whatever you wish to do. Should we wish to look at the order side again, we'd be able to look at the sell side also on these, which is the benefit of both Exante and Alpha. They do offer the sell side on Bitcoin also. Again, we'd be able to obviously look at popping that in. Market, if we were to look at, let's say, putting that at a limit price, which would be above market price, we could suggest at 10,000, or let's say 9,500 for example, we can look at popping a sell limit order in. Stop price again, with our target obviously of 10,000, we potentially look at a stop price of 10,500. Projected loss, should we get stopped on that, from our fill would be 7,500, and we'd also be able to pop in a take profit also. Let's say we'd look down to target that previous resistance band at 8,000. We could send that in as a day. It's not going to obviously be filled today unless we see something absolutely crazy take place, or we pop in good to close, which we'll leave on there for the duration. So again, we could pop that order in. You'll see that order appear here on the right hand side, and that obviously should we get up to 9,500 will be filled. In relation to obviously explaining the Alpha Pro side, it is a lot easier than obviously what we've gone through in Exante, just from the perspective of obviously we're only able to trade Bitcoin on Alpha Pro. That is obviously against two different currencies, US dollar and euro, and obviously gives you the ability to go long and short. If anyone needs any additional help with the platform in relation to obviously charting and adding any of your analysis, then by all means I am here to help for all those that obviously looking to continue an open account on the crypto side. I'd be more than happy to guide them through it at a time of your choice.
And before we carry on to the Q&A session, please mind that capital is at risk. Cryptocurrencies are a high risk investment.